going to start telling you guys about who we are and how we got started in real estate and how that's affected our lives and impacted many, many, many people. So, Arleen?
Awesome. Well, Arleen Garza, this is my husband, Jacob, as he said before. We are based in San Antonio, and our real estate story starts even before we walked onto a single property. So we're going to share with you a little bit about our background. So Jacob had a software company and I was in banking. And in 2007, actually, we found ourselves with some money. And that's a nice problem to have, but we were looking for options on how to invest it. As Jacob had just sold his software company and I resigned/retired, whatever you want to call it, from my corporate job that I had been in for 20 years. So I have some 401k dollars also. And so with this money that we had to invest, we had goals. And like many of you, we were looking for an investment that would grow. That's a requirement. And we wanted to pay less in taxes, not more in taxes. We were worried about the stock market, just like now. Back then, the stock market was very volatile. And just like you, we felt behind. I particularly was worried about trusting the stock market and relying on that 401k money from my previous company. And it just didn't seem like it was going to give us the future we wanted. So we wanted to be in control of our future. And what we did to grow our money, we wanted an investment that would grow without more taxes and more volatility. And like many of you, we were looking for a stable investment. Yeah. So Jacob, what did we do?
Thanks, Arleen. So our first investment was to buy a 24-unit apartment complex, and we did everything. We were the manager, the handyman, the rent collector. We learned a lot, and we learned the best methods. And mostly we learned what to avoid. We learned how to invest in real estate and leverage, right, that investment to grow it faster than anything we've ever done before. So over the next 15 years, we learned even more. We got better and better and better at managing these investments and these properties. And again, leveraging that to grow and create the life we wanted then, now, and in our future. 30 deals later and over 5,000 units. We have, what is it? I don't know, hundreds of millions of dollars, if you would, in assets. Yeah. I can't remember the number. 20 assets we currently have. And most importantly, we've improved the lives of people who live in our buildings. We've improved their living situations. We've improved their current situations. And most importantly, we've improved the communities that they live in. And we know the most reliable investment, the most stable investment is to invest in multifamily. We believe that multifamily investing is the best way to grow your investments. Retire and beat the current stock market, regardless of what it's in. You're going to pay less in taxes, and we get to, with you guys, improve the community and the lives of others at the same time. And that perhaps has been the most rewarding and most fulfilling part of this business.
It certainly has been a feel-good business along the way, Jacob, as you say, to see the happy faces of our residents at our properties.
So together in the last 15 years, we've helped thousands of people, just like you, grow their investments. They've come along with us. They paid less in taxes. They protected themselves against inflation. They protected their capital, and we included them in our investments. So in the next few minutes, we'd like to show you how and why now is the best time to invest in multifamily, which makes sense for you. And we'd like to show you how to pay less in taxes and why we decided to invest in real estate. So as I mentioned, the last 11 years, we've helped thousands of people grow their investments and protect against inflation. So the first thing I would like to talk to you about is the question is always asked. Matter of fact, you were asked this last week, Arleen.
I was.
Is now a good time to invest in multifamily?
Well, Jacob, the simple answer is yes. And we're going to share with you why we believe so strongly in that answer. So the reason we're talking about this today is that people will always need a place to live. And there's currently a shortage of rental properties. In fact, there are more renters than there are properties nationwide, to the tune of about 4 million units that we are undersupplied. So that means that demand exceeds supply, which is the right position you want to be in any business. And we've also seen that when an economy gets tight and money gets short, people will cut back on lots of things. They'll stop going to the movies. They might not buy that new car, but they will focus on two things. And we saw this during the pandemic at our properties. Residents were focused on two primary things: putting food on the table and having a roof over their head. And so those are the things that really solidified for us the fact that real estate, and in particular multifamily real estate, is resilient to different economies, whether it's up or down. People will always need a place to live. So with that, a lot of people may be telling you that real estate is great, but we want to share with you that all real estate is not created equal. And what you'll find is certain things like you may be comparing if you're a single family investor to multifamily. Well, and I want to stop and say, for our industry, we're so used to the word multifamily, and really it just means apartments, investing in apartment complexes. So let's talk about single versus multifamily. So with single family, you're relying on one renter to not only determine the value of your home, but to help pay the mortgage and pay the expenses for that rental property. Well, when that renter moves out, the rent stops until you can replace that renter. So it's a little more speculative. Now let's talk about multifamily. So multifamily, really there, you have multiple renters, as many as 200, 300 at a property that pays for the mortgage and the expenses. And the property's value goes up every time the rent goes up. So it was a very simple formula for us to get comfortable with. And so every time the rent goes up, the property value goes up, and renters keep paying for your bills. And so for us, it meant not having all our eggs in one basket like single family. It allowed us to really spread that risk among a bunch of different units, and it's been wonderful for us. And the other thing I want to talk to you about that all of us are hearing today is interest rates. We're all talking about interest rates going up, and what is the Fed going to do? And when rates rise, the nice thing about multifamily investing is that when rates go up, less people can afford to buy a house. So therefore, the number of renters will grow. When people really can't move into a home, they're going to move into a rental property. And so multifamily properties will gain more renters, and it will help you because the value of your property will go up as more people rent and more people pay higher rent. So that is a wonderful thing for us that we have seen. So even though rates are going up, it's not impacting our properties. In fact, it's helping our properties as we're seeing more and more renters. The other good thing is that multifamily is on sale right now. Well, what does this mean? We've been doing it for 11 years, buying properties. And what we're seeing today is less competition. So in the past, we might be competing with 30 other buyers for a single property. And today, less people are buying. So in today's world, there might be 3 or 4 other people competing for that property. The other thing is loans are coming due for some sellers. And what that means is if they cannot refinance them due to higher interest rates, they are having to sell. And so they may be selling at lower prices, which is what we're seeing. Distressed sales. A lot of times what we're seeing is that the property may not necessarily be distressed. Occupancy may be fine, rent income may be fine. But because interest rates have gone up, some owners are facing much higher mortgage payments. And so all the cash is going to the additional mortgage payment. And that's creating situations where the sellers are distressed because they're not getting cash out of their property, so they're wanting to sell. But what all of this means for us is lower pricing. You think about it, if interest rates have gone up 2%, but the pricing has gone down 20 to 30%, well, it's in our favor to buy those properties. In fact, the last 7 properties that we have purchased have been at a greater than 20% discount. We haven't seen this in the last 11 years that we've been doing this until now. So as they say, for us, we're going to buy low and sell high. And this is the greatest opportunity to do that.
Thank you, Arleen. Very, very well said. Is spot on with what's happening today and why deals are out there for the right people. You got to be the right person to close these deals, and those are far and few between. So let's talk a little bit about the weather. So, and I'm going to draw a parallel to weather's like what's happening in the national real estate market. The national real estate market versus the local real estate market, they're not the same. You can watch these guys, the national news, it's hot somewhere in Texas, of course, and up maybe in Florida, it's just a little bit different. And when the meteorologist comes on in the Weather Channel and talks about the average temperature, well, that does not give anyone an accurate temperature or accurate picture, I should say, of what's going on in your area. So national versus local rent growth. Well, you may be seeing the national news talks lately about how rents are declining and vacancies are going up, which is not the case in Texas. And it's certainly not the case in our particular 25 properties that we own. National income from rental properties may be down, but in Texas, they're up. As an example, let's take a look at our REEP properties. Here, we're seeing rental growth of 10% plus. Like all real estate markets, our real estate is local, and you need to invest in the markets that are on fire right now. And that is Texas. So as you can see, all real estate is local. Now, many companies have come to Texas in the last few years because it's such a great market. But, you know, as Arleen and I and our REEP teams see, we've been buying and operating properties for the last 11 years. So we know this market better than anyone else. And just like you, we know the market you're investing in. We also want to know the people that you're investing with. So let's talk a little bit about how you make money in real estate. How do you make money in multifamily? How do you save money by paying less in taxes? And the reason we're talking about this today is making money with real estate is really not difficult. You see, every month, people at our properties pay the rent. That's simple. And out of that rent, we pay the expenses, we pay the mortgage, and what's left over is divided up to our investors. So let me show you the 5 ways that we supercharge these investments. So at REEP, we have these 5 ways. You see, rent comes in, expenses get paid, and money is divided up to the investors. And that's how we do it. So it's oversimplification, of course, but yes, we do buy the right properties. And we do look for properties that are underperforming, rather on the property side or the debt side in our particular areas. We improve them, we raise the rent, and that's the magic formula.
And Jacob, we're also looking at the market they're located in. Are jobs growing? Is the population growing? And those are key metrics for us when we're looking for the right properties.
And then we have just a real micro look at what's happening on the property, literally street by street. And that's a whole different topic. But in addition to that, we also add fees and amenities to our properties that we buy, like pet fees, parking fees, washers and dryers in the unit. Most people who are investing in multifamily use a third-party management company, which is not effective. And the business plan literally diluted, if you would, can be, as you marshal throughout the ownership of the property. And that's where you become very less effective on what you're doing. So REEP has our own management company. And this is where we control what happens every single day at the property. Next one is time. We figured out a way to cut down on decision-making and execution, all these timelines, by doing it in-house. And that means faster returns to investors, faster turnaround on your money. So how do we get paid? Well, we get paid twice. We get paid when we collect the rent and send your passive income to investors. And then by increasing that rent that we collect, we increase the value of the property. So when we sell it at a higher price than what we brought it for, you get paid again.
That's such a nice time when that property sells and you see the value of it generate better returns for our investors. It's so exciting. And that's what all of our team is working towards, is that exit at the end. And, we have proven this over and over. In fact, what we're showing you is the 9 properties that we've gone what you call full cycle on. And full cycle merely just means we bought them, we managed them, and we sold them. These assets, on average, we held about 3.5 years. And along the way, when we exited or sold these assets, it was at an average equity multiple just under 2.17x. So really, in dollars, what that means is if you invested $100,000, we returned $217,000 on average to our investors at an IRR between 16 to 30%. So
plus their 100,000
plus their initial investment. So for us, that's why we're so bullish on this. This is how we have been able to help our investors grow their wealth, and we've invested in every single property along the way, and also have done the same thing for our money. So let's talk about taxes. Again, we'll talk more details in the end of the presentation with Tom. However, the beauty of multifamily investing is that the government incents us to pay less taxes because they allow us to depreciate the investment that we own, everything except the land, dollar for dollar. So if you're buying a $30 or $40 million property, that's a lot of potential depreciation. And you can write off a lot of the depreciation against your gains. So we have some investors that use it to offset when we give them that big return. They use these tax benefits. It can also potentially offset gains or income that you earn from other businesses. And I say this is all legal. We work with a great CPA. In fact, we're starting to work with Tom's group, and I'm sure we'll see even better returns. But you can carry any of these tax losses from one year to the next. And so how do we do this? We conduct an engineering report. We hire a company. They basically come and they value everything at the property. Windows, appliances, flooring, everything at the property, and they put it in buckets. And then they allow us to take, at this current time frame, 80% of a bulk of that in the first year as a tax write-off. And so that's how we've been able to generate over $40 million in tax savings to investors over the last 5 years. So not only do you get paid twice, but you also get to pay less in taxes. Okay, so every year you don't invest in multifamily homes, you are losing this opportunity. The opportunity to get paid twice and the opportunity to benefit from those tax savings. That is why we encourage you to look into multifamily investing.
Well, that's certainly one of the many, many benefits we love about investing in real estate, but that's got to be right there at the top is the depreciation and the savings we get on our taxes. So we would love to show you more and believe that we are investing in multifamily properties. But not only are we investing in multifamily properties, we're investing in relationships with you, and relationships with the people that live in our apartment buildings are very, very important to Arleen and myself and everyone at REEP. They know who you are. They know our investors and they know our residents. So people ask us all the time about investing. Well, what if I could show you a safe, predictable way to invest in multifamily? Well, it starts by becoming a part of our investor network. Here is where you gain a wealth of information that will empower you to embark on the multifamily real estate journey with clarity and confidence. When we have new opportunity, we share it with you for you guys to invest with us. We send this information to people who are part of our investor network. And that is because we've established a relationship with them. Additionally, you'll have the opportunity to schedule a call with Rebecca Trainer. She's the investor relations manager here at REEP. And you will learn more, or we will learn more about your goals and answer any questions that you may have. So we want you to learn more about our benefits. So please click on the QR code there, and we'll be happy to connect with you. You can also send an email if you're listening to this to invest@reepequity.com. That's REEP. So it's invest@reepequity.com. Arleen?
And if you want to know more, we have over 1,500 active investors, and we are always happy to give you a reference. If you're looking to know more about how we've been able to help others, we're happy to give that also to you. So look for us and click on that or scan the QR code and join our investor network. You will be the first to know anytime there is a great opportunity like those last 7 that we bought at a 20% discount. So we hope you join us, and we're happy to get to know you and learn more about your goals.